We've seen a run-up in gas prices as oil has also gone up, and here to talk about it, what it might mean for your pocketbook is Jim Cramer. Jim?
Joe, I got to tell you, there is what I regard as being a populist move that should happen in Washington. We have become, in this nation, a gigantic exporter of gasoline. At the same time, our gasoline prices are going up. Now, I have often felt that our president wants energy prices higher, sub rosa, because he wants people to use less energy. He wants less greenhouse gases. He wants more renewables. But because of the amount of export, and because of the higher price at the pump, I think if I were a congressman, I'd say, listen, let's get those refiners down here. Now, of course, let's just face it. I believe in a free market. You can export all you want, but there is enough demand because it's worldwide demand. Our gasoline is now traded worldwide. It's not being kept in America, and that's why you're seeing higher prices.
Our friend Dan Dicker has talked about a run-up in gas prices trying to kind of catch up to the rise we saw in crude.
Right. It's true. I mean, we all kind of felt that once the Cushing bottleneck, where you had a lot of oil bottleneck, once you broke that, then you would maybe even see that West Texas was too low, but we never think that West Texas was almost on parity with Brent. Brent is what gasoline is set off of, so the refiners themselves aren't even doing that well. I did a piece about Valero the other day on Mad Money, just saying, listen, remember, they got a lot of hidden assets, but the refiners aren't making more money. They're making less money, so I know that I came with a populist appeal on gasoline, but if you then call them into Washington, which is like what they'll probably do, all they'll hear is, listen, we got to make money too.
So the forward-looking, a lot of people are wondering, what does this mean to my pocketbook in August?
4.25. I think you go to 4.25. But then I think it peaks. I say that because I was hoping that oil, from the point of view of the consumer, would go back to 100. It hasn't done that. Dan Dicker, with a very expert analysis, saying it's become, we talk about gold all the time, a better hedge against inflation than gold. And one of the things that, of course, people say, well, there is no inflation. Well, when you listen to guys like I did at Delivering Alpha yesterday, they all think inflation is about to rage because of what the Federal Reserve is doing. So the way to do that, the way to hedge that, is to buy oil, not copper because of China, not aluminum because of China. All these different metals are not responding correctly. So they're hedged in oil. So there's big financial buyers of oil. This is another thing Dan's been saying, and that's kept the price artificially high.
So the final question, you said oil, crude, how high can it go?
I don't think it goes past here, but I think to catch up, gasoline can go to 4.25. And if we didn't export it, it would be 3.50.
All right, Jim. Thanks so much. You heard Jim. He does see that he doesn't think crude oil can go much higher. Keep an eye on gas prices for The Street. I'm Joe Deaux.